What's going on, everybody? Jeff here. Welcome back to the channel. Haven't made a video in probably a couple weeks now. Month of January, traveled quite a lot. Just got back yesterday, right in time for FOMC. So in this video, I want to break down something that is very important. I covered it months ago. This is going to be the first phase, all right, that has been completed by the Federal Reserve, how the market is reacting. I continuously am on Twitter scrolling through, seeing these one-sided, biasness from many people. All right. One side is certain people are everything's going to move to the upside. You have other people where everything's going to move to the downside, and there's still no clear direction. I'm going to show you guys over a bigger picture and explain to you something that I mentioned months ago and how the Fed pivot was going to work. It's happening in multiple phases. And I'm going to discuss everything to give you a much bigger picture and help you guys try to clear some of the noise, especially when you see some of your favorite people that post on Twitter every single day being extremely biased to one side, guys. So let's get right into it. First off, take a look at the charts. As you can see, 2 o'clock came around. We had a little bit of that algo action happen right over here. And then once Jerome Powell started speaking, which if you did listen to him, he was pretty dovish throughout his entire speech. We moved to the upside. We broke that 406 range, came back up, retested that 410 area. Beautiful setup of, what was old resistance becoming new support. If you were patient, it could have taken another move all the way up from 410 to 413. Okay, but let's get into exactly what Jerome Powell had said. I'm going to break down, just like I said, in an easier to understand fashion. Okay, so first of all, it was a 25 basis point hike. This was priced in. It was nearly 100%. All right, when you look at the Fed fund futures and what investors were currently pricing in. Okay, so there's no change there. He stated inflation has somewhat eased, but it remains elevated. However, he said it shows signs that inflation is starting to cool down. Now, if you remember months ago, there was a big concern that Jerome Powell had said, listen, if he goes too heavy, too hard raising interest rates, he's going to, potentially face some deflationary pressures. All right. So he's trying to find that balance, knowing that even though he was a little slow at raising those interest rates, inflation would continue to rise throughout the process, but we would kind of find try to find that equilibrium. And then obviously we're still facing, all right, is inflation going to go deflationary? Okay, which is really bad for the economy. Or are we going to, pull back down to that 2% and then immediately rip even higher, somewhat similar to what we did in the 70s, really trying to find that balance. However, there are signs that inflation is slowing, mainly because of, housing and fuel, which we will see another report coming out in probably in just less than 2 weeks. He had also talked about the debt ceiling. This was kind of like the added topping when somebody had asked a question about what action Congress should take, and he literally just said Congress must raise it. Okay, the Federal Reserve cannot protect the economy, and if you look at every single other time, okay, that we have reached our debt ceiling, there's a little bit of concern. Really, if you look at the market, it didn't seem like there was much concern this time. Obviously, we've had that slow grind to the upside, and Congress does what Congress always does. They just continue to raise it and raise it and raise it, and they're probably going to continue to do that. And they get to a point to where, listen, everything just begins to breaks. A couple other takeaways where he did say that they were going to have a couple more rate increases, and he still expects to keep rates high through all of 2023. Now, if you guys remember months ago, I had said that the way the Fed pivot is going to work based on history is there's going to be 3 separate phases. There are going to be 3 stages, and investors are going to react to these stages individually. Okay. The first one is going to be the slowing of rate hikes. We had multiple 75 basis point hikes, very large hikes, okay, after the first initial quarter, but very large hikes. And the first one was going to be the slowing. And we've seen that. Okay, over the past few months, we pulled away from that 75. Here we are at 25. We're getting to the target. The Fed dot plot still has 5.1% in for this year. Okay, and he did say that, listen, we are going to slow down even further. That is the first stage. Okay, now, if you remember, the second stage was when they stop raising rates, and the market is going to react accordingly to that as well. And the third one would be what many people think is the actual pivot, which is going to be the lowering of interest rates. Now, just like it took the Federal Reserve a long time, okay, after there were serious signs of inflation and knowing all this monetary, stipend and monetary printing that was done throughout COVID, it took them a long time to even started to raise interest rates. It's the same thing. They want to see how the effects are. Okay, the labor market is still very, very tight. All right, if you look everywhere that people are hiring and so forth. Some employment numbers already have come out showing a little bit of change. Okay, especially the unemployment numbers and ADT employment, a little bit of change that is favorable to the Federal Reserve. We do have non-farm payroll coming out very shortly. Right, I believe it is this Friday, and we'll get a little bit of added numbers, okay, and really just get a better perspective on how strong the labor market still is. And he stated it's strong, and it's going to continue to be strong, okay, even though a lot of people or big companies are laying off people, there still are serious concerns when it comes to a strong labor market. But just remember, like I said, 3 phases. We're reacting very strong on the initial phase. Okay. Does that mean that we are immediately going to turn into, a bull market and we're going to, continue to rip to the upside? And here we are, even though we broke this, severe trend line. Well, we've broken trend lines before. All right, we've closed over them before. If you go all the way back to other times such as 2008, 2002, go into the 70s, there's been severe bear market trend lines that have been very well respected, had 2 or 3, even 4 bounces off of them, and we've broken over them and pulled back down. We've also broken over them and continue to go to the upside. The most important thing I would say here is zoom out even further. When you look at this on a monthly chart, you can see, and let me get even further for you guys. When you look at this on a monthly chart, you can see that we are still insanely volatile. Look at how big these wicks are. You have 30 to 40 point swings in a given month. By no means, okay, are we in that slow grind to the upside. All right, and you look at some of these small blocks. This is the bull market that you're looking for when you see growth stocks really start to run. You see that optimism, the volatility is much less, and you have these much smaller candle blocks than this insane volatility here. Chances are there's going to be a lot more consolidation and choppiness over the next few months and potentially even years before we can get back to a consistency where both buyers and sellers are agreeing on price. Okay, so we've gotten that push to the upside. As for now, it is still a bear market. In my opinion, it is still a bear market rally. We do have a lot of challenges ahead of us. Okay, and I also said to everybody inside the group, if you look at how this chart looked ever since October, we bounced up, even when we pulled back, we held that consolidation and we continue to move all the way up at the start of the year. I said, unfortunately, it's crazy, but these charts look bullish and it's hard to sometimes put that bias away. I wouldn't say bias for myself, but lean. I always have a little bit of lean, a little bit of indication on where I think things are going to be headed. Obviously, I try to adapt very, very quickly because I've been burned by having that strict bias that is unchanged. But it was bullish, okay? And however, you have the contrary where the macro side, the fundamentals, the economy, okay, where the Fed stance are really showing opposing, traits to it, and we've discussed that. But like I said, just think about that and remember what I said. These comes in phases. Right now, investors are having that initial reaction. Is it going to last? We have some big tech earnings still coming up, all right, as well as other earnings. And the earnings, that is another point. It's funny. You're seeing some of these earnings beats, but in reality, the expectations are far lower than the average. So how much of a beat is it really? So guys, that's it for this video. I'll see you in the next one.